Oh man, so a huge week for Bitcoin, which could decide if Bitcoin will be heading up towards 29,000 or back down to 17,600. What a huge week, which is going to decide on the direction for Bitcoin. And we're going to outline exactly what are the catalysts that are coming up this week and what it could mean for the Bitcoin price. So make sure you hit up the like button. Don't forget to subscribe. As always, guys, you will remember that we had a really good week last week. If those of you who traded with me, congratulations. For those of you who want to join me in any of the trade signals, guys, do check out the free link to our Telegram channel. Over the weekend, I was posting constant updates in there on the pattern, which I'm going to share with you. Sometimes I don't get a chance to make videos, so do check out the free Telegram channel. Also, if you want to trade in these moves, BYBIT and BITGET is where you can trade with me using those platforms below. Now, you remember, we were forming this big symmetrical triangle pattern. We got the breakout, okay? We were then looking for another breakout so we could stay in our trade and continue to go long. And as you can see, we got rejected by the neckline. You can see we came back down. We formed this triangle. If I show you on the 4-hourly, we formed this descending triangle, which I alerted to the fact that we were going to break down on Telegram, and we did indeed break down to the downside. Now we need to evaluate, where are we heading from here? Because the reality is, if we head back into this symmetrical triangle, don't forget the breakout to the downside of this symmetrical triangle could be pretty nasty, right? If you want to take the measured move very roughly here, could be talking this at the point of the breakout. Let's say you break out at about here, then you are looking back down at the 14,000, which gives you confidence around this support as well. Okay, so that is the target we don't really want to talk about, but I have to mention it to you in case we do end up back into our triangle. Now, the bullish scenario will see you maybe get a retest off the top of this wedge and then work its way back towards 21,000. But now you can almost see we're in a bit of a channel, right? So we're heading, doing something like this. Will you get the bounce from here and work your way back up? Or as soon as you come down here, are you going to lose that? At which case, you're then looking at lower price targets, which won't be fun. And we're going to come onto the macro indicators, which are going to affect that also. Now, the reason I say you could start heading back to 29 is you have to remember how quickly we fell here. A lot of people are ignoring this. When you fall very quickly like this from 30,000 all the way down, if you look at this, one impulse move came pretty much all the way down to 20,000 without any hitch, right? Without any support coming in, any buy the dip happening on the way down here. So you have to give the credit equally to the upside. If you can break this little bit of resistance here, which was acting as a support bundle we saw around here, then you should expect a nice move to the upside up towards 29, okay? So those are the kind of things you can see from a technical perspective. But what about the macros? Because again, if you're sitting there listening to YouTubers who say, I don't know about macros, I'm not a macro guy. Have you ever heard people say that, right? Analysts say, I'm not a macro guy, or I'm not a TA guy. It's like a kickboxer saying, I don't do kicking. Right? You just throw punches, but you're a kickboxer. Like, I think you've got the wrong sport. You need to know TA, you need to know macros. It's not that you can bury your head in the sand and say, I'm just a technical analyst. No. If you're in crypto, you're trying to invest in crypto, you're trying to trade and make returns in crypto, you need to understand the technicals for your entry points, and you need to understand the macros as well and how it affects the projects you're working on. So that's crazy. So speaking of which, we've got the CPI reading on Wednesday. That is the biggest thing. And I just want to remind you of this piece of data I was sharing with you guys. Just going to come across here to the daily. And as you will see, we formed this exact pattern which I was sharing with you, okay, which is a fell swing low pattern. As you can see, the fell swing low pattern came down here, got the bounce, came again, and you got the run up to the top. As you can see, now you're getting rejected off. And the question is, are we going to come back to the bottom to test the bottom of the channel? And in order to kind of evidence that, I shared this with you guys a couple of days ago. And what I did was I plotted every FOMC meeting, which is the white lines, and the green lines are CPI readings. And as you can see, without fail, over the last couple of times, every time we've got this piece of data, we've fallen from the top of the channel down towards the bottom. Top of the channel, down towards the bottom. And guess what? 2 days away from the next CPI reading, where are we? We're at the top of the channel, right? So the question now is, are we going to start working our way through down towards the bottom of the channel at about 15,000, 16,000? This is what we need to ask ourselves now going into the CPI reading. Remember, the previous CPI reading came in at 8.6%. Markets are expecting that to come even higher now. Are we going to get 8.8? Are we going to get 9%? If we do have a 9 handle, that could be pretty nasty for the markets. Now, important to note, the headline figure is expected to be high because of the energy costs, but we have to look at the core CPI as well, because you may get a huge inflation reading, but you might see the market still rally, and that could be because the core starts to fall. So don't just have a knee-jerk reaction, look at the data properly and then make your informed decisions based on that. Friday, we also get the consumer sentiment figure, which we have to look for as well. We had the jobs figure last Friday, which came in overheated. Further excuse for Jerome Powell to go aggressive with his rate hikes, okay? Very, very important. Now, the other thing which is on the market's mind are the earnings. Earnings season kicks off. Tuesday, we've got PepsiCo, Delta Airlines on Wednesday. You've got JP Morgan and Morgan Stanley on Thursday, Wells Fargo, Citigroup on Friday. So a lot of big hitters this week. And the reason this is important, I said this last week, the market is moving away from the inflation battle. They understand inflation is there. They understand what the Fed is trying to do. And they kind of moved on now. Markets are always a couple of steps ahead from what's actually happened. They price in fear. They don't like uncertainty. So what the market's now uncertain about is, are we in a global recession? Do we now have revenue ticking down and margins compressing? Because if that's the case, that's giving you the clue around the proper global slowdown happening, and that could then spook markets and keep markets risk off. So important that we understand that. The other thing on the mind of the markets is this, which is the inverting yield curve. Now, what this is, and if I just move me out the way, the inverting yield curve, what this means is it takes the US 10-year, which is the risk-free rate, and it subtracts the yield received from the 2-year, which is the shorter-term bond. And now you can see it's ticked below zero. In other words, your 10-year is less than your 2-year. Okay, very, very important. So your 10-year yield is less than its 2-year, even though the 10-year yield is a longer-term bond, which is very unusual. And the reason this is important is this normally slows down lending when this happens and can normally indicate a recession. This has been a very strong indicator of future recessions. So this is not great that it's got ahead and inverted again. Another thing to look at here on the on-chain is to look at the Puell multiple. Now, the Puell multiple gives you an idea that Bitcoin perhaps is starting to become very, very undervalued and is giving you a good risk to reward, okay? Anytime you've dipped into this green area here, it's indicated the very last stages of the bear market. So we need to keep an eye on this. We've been in this green range for a little while, which is suggesting the risk to reward of the purchases you're making now are very high compared to when you're outside of this area. As you can see, when you're in the red zone, at that point, risk to reward doesn't make sense, right? And these normally suggest that you're at a peak high there and there and there. And now you can see that normally these indicate nice lows, as you can see, corresponding to the previous bear markets. Another indicator we can look at is the market value to realized value. This is often a on-chain metric we like to look at here on this channel. And again, in that green zone, been in the green zone for a little while now, and suggesting a really good opportunity for people to continue to buy the dip on your longer term thesis. Now, short term for this week, I'm expecting a lot of volatility. Monday, Tuesday, don't be surprised to see if markets are a little bit volatile. Don't really know where they want to head. You might see a little bit of green and suddenly close red. That kind of thing tends to happen leading up to a critical event like we're expecting on Wednesday. But for me, I want to be risk off. I'm out of my trade. I want to be risk off going into the CPI meeting. And then based on the data we see, maybe that opens up a couple of trade opportunities. Are we going to fall back into are we going to start working our way down towards the bottom on this channel? Or are we going to start, if I just zoom back in here, are we going to get a retest of this symmetrical triangle? Are we going to bounce from this symmetrical triangle, work our way up if we get good news? Or are we just going to tumble down through our symmetrical triangle? This just ends up being a fake out, and we end up working our way to lower lows, retesting the 17,600 low from this date here on the 18th of June. That's the key considerations here on the Bitcoin chart. Few other things to notice as well is if I show you, let's get a fresh chart. So if I bring out the 200 EMA, which is this teal colored line here, what you can see is this is now our 5th weekly candle below our EMA ribbon, which is not good at all, because the longer you spend below this EMA, this moving average ribbon, the more chance that it starts to act like resistance. You don't want this ribbon weighing down on you as resistance, pushing you to the downside, because that can mean you're then in this really long extended period where you're struggling to push through it. So that's one thing I'm definitely keeping an eye out. The quicker we could bounce above 21, 22 and start getting above this 200 moving average, the better it's going to be for Bitcoin, because then at least you can say, okay, we wicked below it and then we've worked our way back above it very quickly. But at this point, you can see we continue to just be fighting around this 20,000, and it's no coincidence we're fighting around this 20,000, guys. We know this is the previous peak from the previous bull cycle high, the 20,000 level we had in December 17, and that's exactly where we're fighting for now. Remember, this was the first time we did indeed fall below our previous bull market high, and now we see that not only have we fallen below it, but the question is, are we going to fall lower again? Because we went and touched 17,600. Are we going to go and test it again if we get bad CPI data? Don't forget, we got the FOMC meeting on the 27th as well. So a lot going on in the global economy for you guys to monitor. Be careful out there. If you're just following the simple time-tested strategy of dollar cost averaging, what a beautiful time to be in the market. I think that's what I always remind myself of. Yes, the trading opportunities can be difficult. Yes, it can be red out there, but the longer it stays red, the greater the opportunity for you guys to go and figure out how to buy your first Bitcoin, how to buy your first 10 Bitcoin. If you're on 100 Bitcoin, then shout out to you. How do you buy your first 100 Bitcoin, right? And become a mega whale. And that's the key right now. If you've got the wrong mindset, then you're going to struggle. But if you have the right mindset, we say, hang on a second, why do I want Bitcoin at 100,000? If I have conviction that Bitcoin is going to be 100,000, surely I would want Bitcoin lower for longer. I don't need the conviction from the candles right now. The conviction is in the asset class. The conviction is in the research I've done, in the technology that I've researched. Therefore, if the Bitcoin stays at 20,000, in fact, I want it back down to 15, right? So I can be greedy, so I can buy more, so I can build my conviction, build my portfolio, such that when Bitcoin is ready to run to 100,000, I don't have any regrets. I accumulated as much as possible, and that's the way you should want to do it. And it's a psychology. It's psychology. The reality is most humans will need conviction from the candles. That's why I call it green candle disease. They wait for the green candles. Look how positive last week was because Bitcoin broke out from the symmetrical triangle towards the back end of last week. Crazy. More people were buying Bitcoin because of that. More people buying crypto. More people were talking about crypto. I mean, even again, I always use that indicator of the social indicator. People are like, oh, Bitcoin's having a good week, isn't it? People don't even follow Bitcoin, right? Because they look for the headlines. And that is what we need to stay away from. Do not buy on those days unless you're trading short term. But do not dollar cost average in on those days. You just want to be picking out all these red days and buying the dip, especially if you're monitoring the markets on a daily basis. What a great time for you guys to continue to buy crypto. I mean, let's put this into perspective. If you didn't know about crypto 5 years ago in 2017 and you came in today, you're buying crypto at the same point as all those early adopters bought it. All those people who understood Bitcoin and were ahead of the curve and were in crypto, gave it the credit it needed back then in 2017. You're coming in now and buying at the same price as that. What else in the world is the same price as it was 5 years ago? Not even a loaf of bread, let alone the hardest money in the world. Guys, don't forget to smash up the like button and subscribe if you appreciate this type of content. Let me know in the comments. Do check out BYBIT and BitGet if you want to trade with me. We're going to have all our trade signals here on these videos, also within our Discord and our Telegram. So make sure you're in those three places. Links are all in the description. Make sure you're on all the different platforms so you don't miss any alerts or trade signals. Watch this video here. I'll see you in the next one.